Powerboat sales just fell for the third straight year. Jet boats down 14%. Stern drives down over 20%. Two-thirds of pontoons sitting unsold on dealer lots. With 1.2 million used listings flooding the market, some owners are losing over $1,000 a month to depreciation alone. In 2026, certain boats are worthless the day you sign, and the data exposes exactly which ones. Jet boats. Stern drive boats, once the backbone of the American family boating market, are now in free fall. NMMA's latest segment data puts stern drive sales down 20.1% year over year through mid-2025, the sharpest drop of any major propulsion type. Dealers who stocked up during the pandemic surge are now sitting on rows of unsold inventory, watching their floor plan costs pile up as buyers shift to simpler, more affordable alternatives. But the pain for owners runs deeper than just a sales slump. The pace of technological change in stern drives has accelerated to a breakneck 12-month refresh cycle, twice as fast as the segment's historical average. Manufacturers are rolling out new digital helm systems, hybrid powertrains, and integrated navigation packages every single model year. For anyone who bought a 2024 stern drive at full price, the boat is already outdated before the second season hits the water. That tech churn is crushing resale value. Industry data shows that a 2-year-old stern drive loses 28% of its original value by mid-2026, outpacing even the steep depreciation seen in jet boats. The math is simple and brutal. A $120,000 stern drive bought in 2024 is worth just $86,000 on the open market today. Loan balances, meanwhile, barely move. Owners who financed at 80% LTV are underwater by $10,000 or more, with no realistic path to break even. Mike G., a dealer with 18 years in the business, explains the squeeze. We are still holding 2023 and 2024 stern drives in the showroom, and every time a new model comes out, last year's stock drops another $5,000 in value. Customers walk in asking about the latest touchscreen console or the new hybrid drive, and suddenly the boat we have on the lot looks ancient. We are discounting just to get them off the books. The relentless cycle of upgrades is not just a headache for dealers. It is a financial time bomb for owners who believed they were buying a long-term asset. With new stern drive models launching every 12 months and resale values falling nearly 30% in 2 years, the risk of negative equity is now baked into the segment. For buyers in 2026, the numbers leave little doubt. Stern drives are a fast track to financial loss, and the market gives no second chances to anyone caught holding last year's tech. Pontoon boats once stood for safe, reliable family fun. That reputation is now upside down. By late 2025, dealer lots were overflowing. 66% of 2022 and 2023 pontoons sat unsold according to NMMA inventory audits. Online, the numbers are just as grim. Active pontoon listings exploded by 40% in a single year, with more than 1 million boats crowding the used market. The result is a brutal price collapse. A typical late-model pontoon that sold for $75,000 2 years ago now struggles to fetch $52,000, a 31% drop. Laura Kay, who bought her Bennington 24-footer at the peak, owes $62,000 on a boat she can't sell for more than $50,000. She's trapped in negative equity, with no realistic way out except to take a loss. Dealers, desperate to clear space, are slashing prices below loan balances. For mainstream buyers, the so-called safe choice has become a financial sinkhole. Sam R. lays out the numbers that keep buyers awake at night. The average 60-month boat loan in 2026 comes with a 6.8% APR, sometimes higher, and lenders rarely go above 80% loan-to-value. For a $70,000 pontoon, That means borrowing $56,000 at nearly 7%. But here's the catch. With depreciation running over $1,000 a month, the boat's value drops much faster than the loan balance. After just 2 years, about 14% of owners are underwater, owing more than their boat is worth. The equity gap grows with every payment. By month 24, the typical owner still owes $48,000, while the resale value has slipped to $42,000. That's negative equity of $6,000, and the gap only widens if the market continues to flood with used inventory. These aren't rare cases. They're baked into today's financing math. Anyone signing a new loan in 2026 is staring down a formula for personal loss. Used boat listings have surged to 1.2 million nationwide by May 2026, flooding every major platform and driving average asking prices down 12% from just 2 years ago. The squeeze is relentless. Tariffs on imported marine parts now hit 38% on key components, and that cost is baked into both new and used pricing. Exports, once a safety valve for U.S. sellers, have collapsed, down 11% year over year, after Canada's 25% counter tariff erased any profit from cross-border deals. Jin L., the tariff analyst, issues a final warning. There's no escape route. With this much inventory and these kinds of duties, even desperate sellers can't find buyers at a break-even price. The used market is so saturated that owners who financed at pandemic highs are locked into negative equity, unable to refinance, trade, or export their way out. In 2026, the resale path is blocked at every turn. Right now, dealer lots are overflowing and resale losses are accelerating. NMMA data shows over 1.2 million used boats chasing too few buyers. In 2026, market reality is brutal. Buying the wrong boat isn't just a mistake, it's a financial trap. Think twice before you take the plunge.